So hello friends, as you are aware, every week I take 5-6 questions and I reply those questions, and hope I'm doing this so that lots of people who get the common questions just watch this video and get their query answered. Generally I make video on the topic related to NRI taxation. So if you have any queries, you can also put as a comment, and either me or my team will come back and answer those questions. Plus, if those questions are really important question, I will pick up in next video and answer that. So let's begin with the questions and understand how we can treat those questions. So let's begin here. Thanks for sharing valuable info. What is a good time to contact you? Dear, there is a team. You can just call those team and they may arrange a call with me. So that's how you can contact me. SRK India has asked the question. Information provided is incomplete when NRI parent children sell property. There is 20% TDS plus applicable cess. In addition, there is a capital gain tax. Please clarify this matter also. Otherwise, information provided may be misleading. So SRK India, let me answer this question. I think you are getting the question wrong. TDS payment and capital gain are two different things, and both don't have to add up. Now understand, if anybody is selling property in India, he has to pay a TDS, which is 20% plus surcharge plus education cess, which is approximately 23%, right? This is the advance tax. Now when you filing your return, you have to pay capital gain, but the capital gain tax will be adjusted from advance tax. So you don't pay taxes twice, you pay taxes only once, either as a TDS or as a capital gain. Okay, so if you have, suppose if you got some profit, so before suppose you sold a property of 1 crore and you are an NRI seller and you want to transfer this money outside India. So for payment, any payment, not talk about the property sale or anything, if anybody is making payment to NRI, they have to deduct certain TDS. Okay, and that is called TDS on payment to NRI. And here if somebody is buying a property, definitely he is going to pay money to the seller. So here the buyer is going to pay money to NRI, that's why he is paying TDS. But when NRI going to file return, he is going to pay capital gain, but he don't have to pay again the tax. He has to just adjust the advance tax against the capital gain. So you are going to pay taxes once only. Buyer going to pay you as a advance tax. Buyer basically going to deduct the amount and going to deposit against your PAN number, and that will show as an advance tax in your income tax portal. Then when you are going to file your return, you will use this advance tax against the capital gain, and you don't have to pay anything then and there. On the contrary, suppose you have paid more taxes, more advance tax. Suppose your actual tax is 5 lakh rupees, but you paid say 23 lakhs rupees. So the balance tax you can claim as a refund. So I think here is my friend has a confusion that you have to pay twice the taxes. No, the taxes will be paid only once. If you have paid extra taxes, or buyer has deducted say 23%, but your actual tax is 5%, the remaining tax you can claim as a refund by filing the return. Now there is a one way you can avoid paying excess tax. So because this is a very much painful thing, that once you pay the taxes, then you file return, then you claim the refund, and it takes time, 1 to 1.5 years it takes time to get the refund. So better idea, before selling a property, you apply for lower TDS. So whatever the actual tax you have to pay, you will pay as a advance tax, which is called TDS. Now suppose you have to pay 5 lakh rupees actual tax. So you will only pay 5 lakh as an advance tax. Now at the time of filing return, you will use this 5 lakh rupees credit against the capital gain tax, and you don't have to pay any taxes. Hope this is crystal clear, and if any more confusions are there, please ask me in the comment section. I will answer, I will clarify these things. Let's take the next question. Gunbaj, this is very confusing explanation. There is no concept of total 5 years. If the person has started India for 60 days in the current FY and stayed for 365 days in preceding 4 years, then is considered as a resident Indian. When you are explaining in terms of 5 years, that is incorrect. Okay, so I basically welcome criticism, because it gives me that somewhere I am lacking to explain the things. So let me tell you, see, section 6 basically explain everything about the residential status. If you go to section 6, there is a 4 conditions. Okay, so first two conditions you have to meet, which you are talking about, 60 days or 182 days, whatever. Then there is, suppose you fail to meet those conditions, then there is a two more condition which you have to meet, and then if you meet any one of the condition, you will become a resident but not ordinary resident. So these are some different concept here. If you just talk about residential status, it's a big business in India, because just to tell you what is whether you are resident or not, some companies, especially big companies, big tax companies, if I say, they charge you anything maybe 10,000 to 20,000 just to tell you whether, because just by changing your residential status, your total outflow of tax changes, right? So now understand, somebody is earning 1 crore and he become resident in India. He is earning 1 crore from US, but he has become resident to India, then he has to pay taxes in India on 1 crore income. So first thing I want to tell you, it is confusing. It's not so simple. And it is confusing because if you keep it very simple, people will start finding the loophole into this. That's why the government of India has kept it slightly confusing, so that, because there is a lot of thing attached to this residential status. Now let me tell you in simple term, if I tell you, if you want to find out you are resident or not resident, if you are continuously residing outside India, most of the cases you will be non-resident. Only if you come to India and stay more than 182 days, then you will be non-resident. Now again, if you are a foreign citizen, then now there is a different condition. So I do not want to explain this, already I explained on this thing. If somebody has more confusion, they can write particularly where they feel they are confused, and I will explain. But let me tell you, it is, yes, it is very confusing, and that's why people charge anything 20,000, 50,000 just to tell you, just to tell a company or a person whether he is a resident of India or not. And let me tell you, most of people do not like to be resident in India, because then they have to pay taxes on their world income in India. So hope this answered, and if you have particular question, then just pinpoint that point and I will answer, I will explain you there itself. Okay, so Arnold, basically he has asked a question. Hello sir, if a seafarer salary is received in saving account, not NRI account, due to some reason, does this income needs to be declared and need to be taxed? Number of days outside India is 173 days. Okay, so there are two questions basically. First question, if you receive income directly in India, will it become taxable? So unfortunately yes. If you receive income directly in India, so there are two concepts you have to understand basically. First concept is called received and transferred, and second concept is called received. So suppose you are receiving a money in NRI account. Now NRI account is considered an account outside India. Even it is in India, it is with the Indian bank, but for the tax purpose it is considered a account outside India. So suppose you are receiving a money in NRI account, and from NRI account you are transferring to NRO account, then it is called receipt and transfer. In that case it will not be taxable. But suppose you are receiving some income directly in your NRO account, it can be taxable, it will be taxable, and in that case you have to file your return claiming that it is a Indian income, and then you have to claim some treaty benefit or some double taxation avoidance agreement benefit. This way you can avoid, or you can show as a exempt income, but you have to report that income as, because, so be very careful. If you are receiving income directly in Indian account, NRO account, it can become income. Second question they have asked, he stayed in India, he stayed outside India 173 days. That means he stayed in India more than 183 days. Now in that particular year, generally he will be considered as a resident. Now you have to see whether in previous year he is a resident or not. So if you talk about residential, it doesn't depend on 1 year. It depends on almost 7 to 10 years background check you have to do. So if you got any other question related to NRI taxation or NRI property sale, please ask me as a comment, and me or my team will come back and answer those questions. Hope friends you are getting some value addition from my videos, and if you feel it is really helpful, please share your views, please like and subscribe my channel so that we can create more such videos, especially to help our NRI friends in their taxation and related issues. So that's all in this video. Thank you. Have a nice day.